In today's video, I am going to give you my picks for the top ETFs for September of 2021. Let's get down and let's check out these amazing ETFs. I think that they could have very big gains this month, but also into the future as well. Let's check them out. Okay, so my first pick this month is QYLD, and there's actually a very good reason for this. So number one is this ramp up of volume that we are seeing, and I'm going to talk about that a little bit later, but the average volume is absolutely massive for this ETF. The expense ratio is 0.6, so it's kind of on the higher end, but lower end when it comes to covered call ETFs. Now, if you're new to covered calls, basically what it is in short is essentially, let's say they have 100 shares of, let's say, Apple, and they want to create extra revenue from those 100 shares. What they would do is they would sell a call option against those 100 shares, let's say for Apple to hit $300 a share. Just as an example, this is just random guesses on prices. And at this point in time, let's say Apple is currently worth, let's say, $200. Somebody could buy this call option and give a premium of, let's say, $150 to have the ability to buy those 100 shares from you for $200 if they hit $300, let's say, on December 1st, which is a few months away. Then at that point, you would keep your $150. You would get paid $200 per share at that future price if it hits $300. However, if it doesn't hit $300, you keep your shares, you keep their money, and of course they don't get their 300 shares, which is how this ETF and other covered call ETFs can pay such high dividends and high yield, which is 11.8% currently with this ETF. Now, as we can see, it's had a little bit of a decline while the NASDAQ in general has been going pretty high. We've then, of course, seen a massive downfall during that pandemic that we had. And, of course, it has risen since. We've actually seen the NASDAQ sort of slightly slide recently. We've seen that in the covered call ETF, and we've also seen that in the reality as well. The one thing that people have to really pay attention to is that increased volume that we've seen since that big recovery has happened. This massive amount of volume to me is what I think a lot of investors or higher end, more expensive investors are starting to look more at this covered call because they think that there may be potentially some downturn, maybe in the market, or some sideways action, which then to me will tell me that, of course, a covered call strategy is going to be best, because whenever the market trades sideways, that is essentially when covered call ETFs do absolutely amazing. We've also seen a pretty good uptick when it comes to dividends until recently, but at the same time, it's been pretty well steady at just over 20 cents a share, or around 20 cents a share. So at that point, that's absolutely fantastic in my books. By the way, it pays every single month, so this is a great way to have income replacement if you've potentially lost your job due to the pandemic. It does hold some of the biggest tech names on the market. Apple, Microsoft, Amazon, Facebook, just to name a few, are massive companies. Nvidia is going to be going for a run, same as Tesla. Those two companies are very, very strong. A great way also to play the way I think the market's going to run in September is ZWC. So with ZWC, this is a Canadian option for you American investors. However, with ZWC, we can kind of guess that the market's going to be really trading sideways, especially here in Canada. So ZWC does hold all of the, or a lot of the high dividend stocks. It does have that covered call strategy as well. However, we're going to be really seeing some sideways action in my thoughts, because we're having an election up here, and depending on who gets in, there's some uncertainty there. There's, of course, the polls that are saying conservative, which is really good for business. But other polls are starting to say liberals are starting to slide, which means less spending in healthcare. So at this point, We don't necessarily know who's going to be running the government. There's, of course, a lot of people hoping for the Conservatives to get in, and I'm not going to say what side I'm on, but I personally like a certain color that is on this page right now. If I'm not I'm colorblind, but that looks blue to me. I'm blue, but either way, I'm on the blue team. Anyway, so ZWC is a great option. From there, it does pay currently around 6.5%, which is really, really good considering that the covered call ETFs do outperform while in a sideways market. And of course, distribution again is going to be monthly. The management fee is 0.72%, so that is quite high when it comes to ETFs, but at the same time, it's a covered call strategy. They're generally all around 0.7 something. And the market volume is quite high, again, for a Canadian ETF, being over 450,000 shares traded on average every single day. When it comes down to it, it's about 11 cents per share every single month. However, recently they did lower the dividend. Now, they didn't exactly come out and say why they lowered it, but I've made a video on why I think they lowered the dividend. And some of the bigger companies that they currently hold is CNR, BCE, which is Bell, TELUS, Enbridge, Royal Bank of Canada, CIBC, Bank of Nova Scotia, TD, Manulife, Nutrien. Some of the companies that are going to do extremely well if the Conservatives get in is going to be most likely Bell, TELUS, Enbridge, Royal Bank, CIBC, Nova Scotia, TD. Those are the companies that are most likely going to be doing extremely well if the Conservatives get in. So if you're looking at it as a 1 or 2 month play, then this could be a fantastic way to get some big dividends every single month. But also, if the polls are true, then at that point, we could be looking at this ETF temporarily spiking because the share prices would be going up. Now this is ZWC's chart. It's sort of a sideways trading chart. We have to remember that the Canadian stock market wasn't exactly going anywhere during that period of time. Of course, everything dipped and dropped like crazy then, and of course this has had a nice recovery since. It would have been absolutely beautiful to be able to get in there, but again, same thing. We're seeing a lot of the covered call ETFs having absolutely massive volume versus what's happening before. And in my mind, with all of these different covered call ETFs having this ridiculously massive volume, that tells me that there's some pretty big investors thinking the stock market's going to be trading sideways for a little while. Another covered call strategy is the banks. Now again, because of the polls favoring the Conservatives, I am really getting onto the bandwagon of Canadian banks. Again, I am always a fan of Canadian banks. That's the portfolio strategy. Basically, it holds the Canadian banks, and from there, it's able to sell the call options against them. And from there, what we are looking at is a distribution of around 5.68% at the time of making this video. And of course, the management expense fee is again 0.72%. It does pay monthly as well. And the market volume is on average around 570,000 shares traded per day, so there's quite a few people trading this ETF. It does pay around 10 cents per share, and it has just recently this year upped its dividends as well, so it's a fantastic option to get right now. Basically, what it holds is the BMO Equal Weight Banks Index ETF, which is going to be, of course, the Canadian banks. Then it does have the Canadian banks as well, singular stocks, which then, of course, these are the ones that they would do the covered calls against. If you did click more, you would be able to see the current call options that they have out. So for example, September 17th, they have Bank of Nova Scotia hitting $82 per share. So of course, before September 17th, we would be able to see if those call options, or even TD, we can see those call options expiring unfulfilled or fulfilled. Now this is ZWB's chart, and of course, just like the banks, it traded sideways, and since then it's been exploding. What you will notice with covered calls is they don't have that as much of an increase as the bank stocks singularly, mainly because they are doing a covered call strategy. It does perform pretty well best when it's just above even. And again, we are seeing the increase in volume again. Now with this one, it's starting to tick lower again, which is interesting, but pretty much all of them since the virus was happening and of course this massive downturn, we've been seeing some increased volume when it comes to covered call ETFs, and that to me is just interesting to see. Now, I personally believe that the tech stocks, especially going into September, back to school, they're going to be spiking, which leads me into my next ETF, which is Invesco QQQ. It's essentially a NASDAQ ETF. It does pay a wee bit of a dividend, but I'm not getting that for the dividend. The volume is really good as well. The expense ratio is really low, but we can see here that, of course, the volume is starting to really trail off, and any time that their volume is starting to trail off, we start seeing the higher chance of one of two things happening. Either a massive sell-off or there's going to be a massive uptick. So with there being earnings season coming up very, very, very soon, and of course, we're going to be potentially seeing the back-to-school rush into these style stocks, there could be another big leg up. But again, anytime that there's volume going lower, think that there's going to be a little bit of a downturn, which is the biggest reason why I'm actually looking at this ETF. Because what's going to happen is kids are going back to school, they're going to be actually going to class, they're going to need new stuff. Now, when it comes down to it, September's always a down month. So which then leads me to believe that the QQQ and stock market in general is going to be slowly trailing off, or there's going to be a bigger spike of downturns coming very soon, which would be a fantastic time to get an index fund if that's how you invest. Now for the dividends, again, not a massive dividend. That does pay roughly 3 to 4 times per year, but it's not a massive dividend. Its top holdings are, again, the top holdings on the NASDAQ: Apple, Microsoft, Amazon, Facebook, Tesla, Alphabet, Nvidia, and obviously the 2 Googles. So those are my picks for the top ETFs this month. There is going to be a downturn. There is always a downturn in September. However, I think the American market's going to have a little bit of a downturn. That would be a fantastic time to buy some of these index ETFs. But in Canada, I think there's going to be a little bit of sideways action until we see the election happen, which is around the 20th. I'm going to be doing early voting myself. And of course, we'll have to see what happens. It's going to be a very interesting September. I'll see you guys in my next video.